Hey, this is Sasha, and welcome to another episode of Let's Talk Stocks. In this episode, we're going to go back into some technical analysis basics. And we're going to take a look at the rounding bottom stock chart pattern. So a rounding bottom, when it comes to stock charts, is basically a reversal pattern. It doesn't always have to be a reversal pattern, but typically what happens is you go ahead and you create kind of this rounding bottom effect. Oftentimes it comes from, let's just say, higher prices. Then stocks play around and isolate here, kind of like a digestion pattern to change that momentum around of that direction. You got a little bit of resistance right up here at these swing points or levels, and then the stock will eventually break out. Oftentimes it can retest that support or resistance. So this will be a resistance or support level that'll retest, and then it can continue to move kind of higher. So you're kind of looking at it like this. Sometimes it can also come from lower prices, meaning being a little more bullish, and then you have a pause, and then you move higher. So this is really the way that the pattern looks like. It's sometimes also known as a saucer pattern when you're looking at it, because it is kind of like a saucer. It's a little different than the cup and handle pattern. The cup and handle would have kind of a handle here, whereas this one is retesting this support, right? So your entry, when you're looking at this stock, would be probably over here or when it retests. So these would be your two entry areas, okay? When you're looking at the volume for this, oftentimes the volume declines on this pattern because you're digesting the movement. Sometimes later on, as it starts to pick up speed because you're changing directions, you might have or see an increase in volume. And especially on the breakouts, if you see a strong breakout, that volume might be a little bit strong. So just keep an eye out on that, just because of the decline in volume here as you're digesting. Overall, the pattern really works kind of in the way of, hey, we're digesting the move. We're moving kind of sideways. And instead of just going sideways like many other stock patterns do, where they're just kind of isolating in this range, well, this one creates a little bit more of a friendly turnaround. Think of it like a big boat turning around. And that's really what it does, is sometimes you can move here and then it'll go back down, and it may look a little weird that maybe it's not a perfect saucer or a perfect rounding bottom, but it creates kind of that rounding, softened, cushioned effect. If you're looking for a target or a projected move in this, you're looking at kind of the, let's say, the top of that saucer almost to the bottom of that. That's kind of a good range. And then take a look at how far that can go and draw that up here. So this would be your target. Of course, if your stock is moving to the upside, it can go much further. It's just that initially with the pattern, that's the target. And then with inflation, just due to price rising, it can move much further and beyond those prices. So, but that's kind of a good guideline for a basic target where you may want to take some profits. I've also seen that this chart pattern sometimes, depending on the amount of ticks, can get confused with, let's just say, kind of like a head and shoulders pattern, because overall with a head and shoulders pattern, when you see that pattern, right, so you might see something like this, okay, it kind of looks like a rounding bottom as well. And what I want you to remember is it's not as important how to really properly identify, is that a head and shoulders or is that a rounding bottom? These patterns do have some technical specifics to when you can claim them a rounding bottom or a head and shoulders or a cup and handle. But overall, your main goal and objective is to see, hey, where's my entry point? And oftentimes it's just that top of that saucer or where it starts with that resistance level. So you're really watching that and the influx of strong volume. And when you see strong volume coming in and price moving past resistance levels, really that's more of a key and more important than, is it the rounding bottom or is it the cup and handle? Really does not matter. What's more important is, hey, where do I get in? How do I manage my money? How do I manage that position? And that'll be a little bit more favorable. But as far as the rounding bottom pattern goes, just understand it's more of a pausing pattern. Oftentimes it's a reversal pattern, but it can be both. It pauses that stock to allow it to consolidate, to distribute the shares so that it can build more energy to move to the next stage. So stocks don't go up every single day. They need time to pause and digest, and that's what this pattern does. It's usually a little bit of a longer pattern, so many patterns are 6 to 8 weeks. Just like the cup and handle, this one might be 8 to 12 weeks. It could be a little longer, just depends on market conditions, but just something to watch that it's just you're looking for a change in direction often, or just a pause and break in a good movement to the upside or the downside. It's just pausing that movement, allowing things to digest, so that way you can continue further into higher or lower prices. Let's go to the chart and take a look at the rounding bottom pattern here. And when we take a look at this example, this is Rockwell Automation. We're looking at the stock price continuing to increase from lower levels, about $8 from 1992 to 1994, and then the stock pauses a bit and it creates this little rounding pattern. Think of it like a saucer pattern. Now, we create a little swing point at the initial saucer top, and if you draw that across, you can see that when we do the breakout on a little bit more increased in volume, it does so on nice wide price spread, and the volume picks up, and then we break through. Now, it acts a little bit weak there because we do come back to retest that level actually 2 times there. So we come in once, maybe twice, and then finally it bounced, and then again we get an increase in volume and the stock continues to pick up speed. But really what I'm trying to show you here is this saucer pattern right here that lasts almost a full year and a half, from 1994 to mid-1995. The stock is just digesting the move. And sometimes this happens because the stock has just ran up so quickly. Other times it's just the economy is not doing so well. So in either case, what's going on is it's just digesting. Think of it like a sideways move to pause to allow that stock to continue running into further higher prices in the future. So it just allows the overall market to catch up. Let's take a look at another example here. This one's a little bit less of a saucer pattern, but it is Netflix. And the reason why it's a little bit less of a saucer pattern is because we do have a few bounces that came in place. And because of that, it's a little less rounding. In either case, the stock did do very well in 2010, came up in 2011, sold off mid-2011 quite a bit. And then this stock created this little bit of a rounding bottom between 2012 and 2013. So basically based a bit sideways. And when you look at this, we're just digesting that move, the huge sell-off and the huge increase that we've had over the last couple of years, that magnitude of those movements that the stock digested. And finally, eventually with time, we did break out past some of these bounces that we've had, where that stock picked up a little bit of steam and a little bit of volume because we had a little bit of things dry out. The volume came in. We managed to pop and move again into further higher prices. And as you know now, Netflix is way higher prices. It even did a split a couple of times. So anyways, the stock had this little digestion pattern that tended to work out for it. And again, kind of like a saucer there. Rounding bottom pattern that worked out fairly well. All right, so thank you so much for joining me in this video. I hope you found it helpful to learning some more technical analysis. And if you did and you want to see other great training videos like this one, go ahead, hit the button right over here, enter your name and email address when you get there, and I'll send you other great training videos as they are released, along with some updates to some of the projects I'm working on, like some of the books and courses that are set to release in the future. Thanks again, and I'll see you next time.